Hi everyone, welcome back to the US CPA classes for business analysis and reporting examination, right? So we are in state and local governmental accounting, which is your chapter 4 of your business analysis and reporting examination. So in this particular video, I'll be walking you through in detail about notes to financial statement and management discussion and analysis. These two topics are from format and content of financial section of annual comprehensive financial reporting of your state and local government accounting. So let's dive into to understand more in detail about notes to financial statement and management analysis and reporting.
Class FAR come BAR class, right? It's governmental accounting, which has been common for FAR as well as BAR. So in the last week, we have started with state and local governmental accounting, which will be around 10 to 20% of the BAR exam or 10 to 15% of the FAR exam if you are sitting for the old, you can say, curriculum for the FAR. The new curriculum, it has been moved to the BR. So in last classes, we started with 4.1 format and content of financial section of annual comprehensive financial report. And we have started with the government-wide financial statement. We took the understanding of government-wide financial statement. We also took the understanding of government fund financial statement and the difference between these two, and how we need to make the reconciliation between these two, which is being a mandatory disclosure requirement. Then we discuss about various categories of fund, government fund, proprietary fund, and fiduciary fund. So today we'll be discussing more in detail about notes to financial statement, and we discuss about management discussion and analysis. So these 2 points are majorly we'll target to cover, and if time permits, we'll cover the budgetary comparison reporting as well. So these three topics we have covered in last week, and today we are planning to cover these two topics, and if time allows, we'll jump into the budgetary comparison reporting as well. If you see from the last notes, so this is what we have done, like level of reporting for the overall financial statement, government-wide financial statement, and fund financial statement. We understood what all the government fund, proprietary fund, fiduciary fund, and the requirement of reporting of governmental activity, business type activity, and the component unit. In addition to that, I think I have shared one financial statement of a, I think, local government for your ready reference, right? Hope you all got that one.
Yes, sir.
Have you guys downloaded that?
Yes, sir.
Okay, cool. So then we discuss about like the type of fund, governmental, proprietary, fiduciary, and then within the governmental fund, 5 categories. So all those things we have discussed, which include your general fund, special revenue fund, capital project fund, and then permanent fund or debt service fund. And we discuss about the disclosure of that. We did certain practice question in that, and then after transferring of money from one fund to another fund, the adjustment entry and journal entry we discussed, and the deferred resources, both inflow and outflow, we have discussed. Then after we discuss about the grant with no time restriction and with time restriction. And then we have covered this comprehensive annual financial report, the 3 section of the report, and this we have been correlated with the examples or illustrations or with the, the local government financial statement, which I have shared with you. What all comes in the introductory section, financial section, and statistical section. These all we have covered. And then we discuss about major funds. What are the major fund? The first test and the second test. Then after we discuss few additional topics, and then we did lastly the practice questions. So till page number 13, I have shared the notes with you in last class that we have covered. Now today we'll be covering the notes to financial statement, which is 4.1.5. 5 or 4. Let me correct this one. I think it's 4. Let me quickly see. Sometimes I get confused. Yeah, 5 and 6, sorry. So we have done till here. Right, so 4.1.5 will be covered today. Okay, notes to financial statement. What generally comes in the notes to financial statement? When you make like financial statement, I'm sure you all are being exposed to financial statement. So what all things generally you keep in mind when you make notes to accounts? Kashish, Ayush, Akash, Arun.
If there is any adjustments and what are the things that come under the account.
Sorry, your voice is very less, Arun.
So if there is any adjustment to the account,
Sorry, your voice is very less, Arun. Do you remember like the financial statement which I have shared with you?
Yes, sir.
So what generally comes in notes to accounts?
Sir, notes to accounts are consisting of all the disclosures, like related to what is appearing in the balance sheet and profit and loss. So we are doing a detailed working and explanation of whatever items are appearing in the balance sheet. All the balance sheet and P&L items basically are explained in detail if through notes to accounts. That's what I understand with
Yeah.
this.
Anyone else would like to add? Abhishek, Arya, Surya, Princey. So notes to accounts include two major things. One is the significant accounting policies and the principles. So significant accounting policies and principle include those usage of respective gap, right? How you are recognizing the revenue, basis of the preparation of the overall financial statement, how you can say you are estimating the things, how you are, you have policies for the depreciation. All those things comes under the significant accounting policy, whether it's your basis of preparation of financial statement, basis of consolidation, revenue recognition, amortization or depreciation, or maybe valuation of inventory, usage of the method for the inventory, LIFO, FIFO, weighted average, all those things comes under the accounting policies. Then second important thing which you have been exposed to in the normal financial statement of any company is about notes to accounts. So in addition to significant accounting policy, like Ayush has also shared, you provide the detail of the respective item which is coming under the financial statement, or you can say balance sheet and income statement, which require additional information for the user of financial statement to better understand the financial statement. But in addition to that, certain amount which may not directly coming to the balance sheet, directly coming to the income statement, but there are certain additional disclosure required as per the gap. So that can be your litigations, that can be your claims, that can be your assessment, that can be your estimate, that can be your related party, that can be your segment reporting, right? Or that can be your long-term employee benefits. So those are may not be directly tied to the financial statement, but those are mandatory requirement for the disclosure perspective, so that the user of the financial statement can better understand the financial statement. Make sense? This is what I'm sure you all might be exposed to. Yes or no? Come on, are you guys with me?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Right. So I think I've shared this 10K with you, and I'm sure like most of you have been gone through this 10K. So it shows like all the notes to financial statements. So we'll go over here. We'll give you stick here. So notes to consolidate financial statement. You see page number 55. So here onward, like see, for the normal financial statement, that means for profit organization or business entity. So you provide all the accounting policies, significant accounting policy, which include your revenue recognition, and which include your fair value measurement, which include your receivable, right? Leases, investments, special tool, goodwill, intangible, long-term employee benefits, right? All these things you are being exposed to, right? And then after, once these all accounting policies are been done, then you'll be disclosing like the detail of revenue. So this way, like disaggregated revenue, which they have disclosed, right? Same way, if you see in after the revenue, they have been disclosed about marketable and other security, right? Then after they have been disclosing this receivable of the general motor financials, right? And then after, like the disclosure of this equipment and operating lease, so on and so forth, right? For all the major, you can say, balance sheet item or major income statement item, the respective disclosure they make. But after that, if you see, they make additional disclosure which is not directly tying to the balance sheet or income statement, but it is being for the related party, for the litigations, claim, assessment, commitments, right? All those things is also require additional disclosure. So now when you are following the gas, right, for the governmental accounting standard, when you follow gas, at that point of time, you follow the normal accounting standard rule, but there are additional disclosure required. So additional disclosure may be your budgetary information, right? And certain unique government financial statement generally include the disclosure of encumbrance, right? Any violation, material violation, any reporting entry, any category of taxes, whether it's property tax or tax for the calendar year, levy date, due date, revenue recognition, budgetary basis, and the difference from the gap basis, interfund transfer, pension plan, investment risk, and debt or lease obligation, and for the subsequent 5 years. So these are like in addition to the normal disclosure which you will be making in the notes to accounts. So just to summarize, for the governmental accounting purpose, what all things you will be keeping in mind for the notes to financial statement? The first one is accounting policy. So accounting policy include all the significant accounting policy for each category of accounting item you have been in your financial statement. Second will be the disclosure part. Disclosure of all the financial statement which are material in your balance sheet or income statement. What we call in the governmental accounting, the net position and change in
Net assets.
change in net asset, right? So if you see over here in the governmental one, I'll show you really quick. And I think they have not linked it. So page number 25. We need to go to page number 1 second. Yeah. So if you see like this way, you'll be representing your statement of net position. After the statement of net position is a statement of activity, in which you'll be having expense, indirect expense allocation, and then after program revenues and related expenses, and then general revenue and reserve, and the transfer from one funds to another funds. So these all kind of disclosure you'll be making. And then after the balance sheet of governmental fund. So earlier what we have seen is a government wide financial statement. Now we are coming one by one to the respective category of fund. So in the government fund, there are 3 category of fund: general fund, capital fund, and other governmental fund. Other governmental fund is some of the all residual fund, right? And then after, if you go down further, so this is statement of revenue. 1 second, really quick. So I'll show you the notes to accounts, how it looks like. So they are showing all funds one by one. Yeah, here you go. Summary of significant accounting policy, right? So description of revenue of the entity, blended revenue, summary of significant units, significant accounting policy, continuing like basis of presentation, fund financial statement, the basis of fund financial statement, basis of accounting for those, and then after federal, state, and local grants. So all this significant accounting policy you need to present, and then after once all the significant accounting policies are being presented, the next step you'll be doing is the numbers, the disclosure part of it. Right? Just 1 second, I'll take it. So yeah, so this is cash investment, and then after this is disclosure of cash investment, how much is being restricted, how much is unrestricted, how much is total, right? And then after custodian credit risk deposit, how much is the investment composition, so interest rate for the respective category of investment, par value, fair value, and then investment maturity in 0 to 1 year, how much investment are maturing, 1 to 3 year, how much investment are maturing, 3 to 5 year, how much investment are maturing, and 5 to 10 year and more than that, how much investment are being maturing. That kind of disclosure you will be making for the investment. Major part of the government fund may be like investment, so that required huge disclosures, and the fair value of the respective investment, how we have calculated. Then receivable include your general fund, capital fund, non-major fund, internal service fund, and the government wide service concession arrangement, and the governmental activity total, right? So this way you need to give the disclosure for the respective category of item which is being reflected in your statement of net position and statement of change in activities, right? Capital assets similar to your fixed asset register, your opening balance, your addition, your reduction adjustment, your transfer, and then the closing balance, which include like by business type, the governmental activity, business type activity, right? And then after the depreciation or amortization on the same, right? So this, and then capital commitments, if there is any capital commitment, that also required a separate disclosure. If you have long-term liabilities, what are those liabilities category wise, maturity of them, rate of interest, annual installment, principal amount, or the interest amount, right, as per the repayment schedule. Those all disclosure are being required. So now I'm just walking you through so that you to make yourself familiar with how it looks like in actual financial statement, so that when we are studying the theory, you can correlate with this practical experience, like how it is being related in actual financial statement, right? So now coming back to the notes to financial statement. So notes to financial statement, like we have discussed, first one is the accounting policies in principle, then after standard disclosure, but there are certain unique or additional disclosure required only and only for the government financial statement. The first one is encumbrance. So you need to report the encumbrance. Second is material violation, if there is any violation related to the legal or contractual provision. Third one is what all reporting entity we have. The significant entity need to be reported separately, and non-significant entity, all those non-significant entities need to club together. Then fourth one is property tax, including the calendar and levy date, due date, revenue recognition, etc. And then budgetary basis and how it is different from GAAP. A reconciliation is being required. Then interfund transfer and the receivable and payable. And then pension plan, deposit and investment risk. You have seen like a big disclosure for the investment, because that required all complete disclosure at what amount you have purchased, what is the date of maturity, period of maturity, fair value measurement, and at what amount you are valuing the same into the balance sheet. If there is a difference between fair market value and the amount you are reflecting in the balance sheet, then reason and justification of the same. And then after, if there is any debt or lease obligation, that must need to be disclosed separately, and it include principal and interest separately, like we have recently seen, right? Principal amount is separate, interest amount is separate, total amount is separate, right? on individual funds. So this is about government-wide financial statement. In addition to that, you have fund financial statement also, right? So those fund financial statement also required certain additional disclosure. Those are unique to the basic statement of government that result from the fact that non-major individual fund data are aggregated by fund category to the basic financial statement. So any deficit in the fund balance or net position of the individual fund need to be disclosed separately, or material excess of expenditure over the apportion in the individual annually budgeted to the government fund need to be reported separately. So if you go back and remember when we discuss about the fund financial statement for the respective category of fund. So let me take you to the fund financial statement really quick. So these all are the notes to accounts for the respective account. But before that, we had discussed about like fund financial statement also. So let me quickly show you. Yeah. So for example, this is the statement of change in fiduciary net position. Fiduciary net position, you have investment trust fund and you have trust private purpose trust fund and then custodian fund. So which is being total of all these three, right? Then after, if you see above in the fund type activity, like here you have three category of fund: SCVMC fund, Valley Health Plan, and the other fund. And then you are showing the total. In addition to that, you'll be showing separately about inter-service fund if you have any, right? So that way you need to disclose all the respective fund separately for all the major fund. And if there is small fund which is not material, you can club it together and show as other fund balancing, right? Any doubt so far on notes to accounts requirement for the government-wide financial statement and fund financial statement?
No, sir.
Right, Prachi, Surya, Gurmehar, Kashish.
ये जो यूनिक disclosures हैं कुछ तो I believe we have in normal financial as well as like reporting entity या नहीं
Like no, these are like encumbrance, violation, reporting entity. Yeah, reporting entity generally, when you are making a consolidated financial statement, you do not report separate entity. Maybe you can report a segment reporting, that's different.
Okay. You're just disclosing the name of the reporting entities, or you're disclosing their results as well?
Yeah, the results as well. Yeah, complete financial statements. Whereas in consolidated financial statement, we do not do. We do a consolidated number, but if required, we can give the disclosure of segment. But segment can be by product, by service line, or by geography, but not entity level.
Okay.
Right? Okay. So we are jumping on to the second